Hello everyone, welcome back to my YouTube channel and I hope all of you are doing great. So in today's market review, we're going to look at first the market breadth analysis, index review, sector review and stock selection. So you must have noticed the market action from last 2 days that the stocks have been going down and the market has not been very kind. So we're going to just review how the market is likely to behave going forward. Again, predicting the market direction is really difficult, especially when there's an important event coming in on Tuesday, I think so, the budget, right? So that is another important event that could have an impact on the market. But still, we're going to review the market, how the market is looking right now, if there are some stocks that are still looking good, how the indices have been behaving and how the sectors have been behaving, right? So let's get started. First, we'll start with the market breadth analysis. So for that, I'm just going to go to this market breadth sheet that I have, right? So I've made a separate video explaining this sheet and I'll give the link of this sheet in the description as well, right? So here are few metrics that we need to look at first, right? First, we'll see the stocks that are up 4% today versus 4% down. So one thing is clear, from the last few days it was continuously going down, right? So there was a dip on 12th July, but again it bounced back a little on 15th, but since then it has been declining continuously and falling a lot, especially on Friday, right? And look at the stocks that were down 4% on that day, 328. The number is very high, right? And if you see the number of stocks that are below the 10-day moving average and the 20-day moving average has been above the 10-day moving average and the above the 21-day moving average has been decreasing continuously, right? So that tells us that there's a bit of weakness in the market. But one another interesting point here, if you just look at these graphs, right? So this is the this is the number of stocks that are above 21-day moving average, and you see it suddenly dipped from 60%, around 62% to 35%. So again, that was a sharp dip, and most of the time whenever a sharp dip comes, there's a small bounce back in the market. So I'm not suggesting that the market will bounce back on Monday or Tuesday itself, again due to a very important event on Tuesday, right? So that could have an impact. But again, what I'm saying is that whenever there's a drastic fall, there always comes a pause in the direction of the market, right? So simply means is that the if the stocks are going down currently, there could be a pause that we could see on Monday, right? Again, there could be a continuation as well, but that is just my guess, right? Another important point you'll see here is the overall percentage of stocks that are above and below 50, 20 and 21, right? And you can see the monthly advances of the sector. So most of the sectors have given a negative, most of the sectors have performed negatively during the last 1 month, right? And if you only the telecom has outperformed, if you see, and aerospace and defense, which was the leader last month, is now the biggest laggard right now, right? And you see the number of stocks that are above the 200-day moving average is quite stable actually, right? And you see the change in indices on 19th July, most of them were negative, with the highest cuts in the metal and the aerospace and defense sector. And if you see the number of stocks above 50, this is also quite stable. So there's a short-term dip that has come in the market. Overall, there's still a bit of stability, right? So again, my take here would be there could be a bounce back on Monday or Tuesday, depending upon the reaction on the uh, budget, right? So again, I'll be cautious right now. So now let's move on to the second part, that is the index review. So we'll just look at indices, how they have been performing, our major indices. We'll start with the Nifty. As you can see, it has been continuously going up, and from the last few days it is led by the large cap IT stocks like the TCS and the Infosys and all of them, right? uh, if you look at the bank Nifty, it has been quite stable as compared to the other indices. If you look at the bank Nifty, it has been quite stable, mainly due to the ICICI Bank, SBI Bank, right? So there hasn't been a much drastic fall in the prices of those stocks, right? If you look at the mid cap index, so there were large cuts on Friday in case of mid cap index again. So this was the election result candle, and since then the market was continuously going up. We had a shakeout few days back, right? We had a shakeout, we had a strong shakeout few days back. Again, it recovered a bit, but this time you can clearly see the fall is increasing, right? You can clearly see that the downside strength is increasing, right? And you can also look at the size of the candles as well, right? So it may continue down towards the 50-day moving average, which could be the next support line in case of the mid cap. Small cap and the micro cap also behaved similarly. If you see micro cap index, which moved up sharply after the election result from this particular range, right? And the cuts have been deep this time, and it can take support at the 50-day moving average as well, right? So we have seen this similar kind of movement earlier before as well, especially around the events, right? The important events like the election and the election result and all of the those kind of events, right? And in case of small cap as well, right, you see, so most of them went down, with it resisting the fall, the Bank Nifty resisting the fall, right? And if you see, metals had a deep cut, right? So it was in a really nice position here. So it didn't went up much after the election result, but it was quite stable, right? It was consolidating, but now it has broken the 50-day moving average, and currently it is in the negative direction, right? So I'll stay away from the metals for now, right? And if you see the auto also is in a range formation right now, and it is expanding a bit on the downside. So current support would be around this 50-day moving average right now. And if we see the financial services, so it has been quite stable as compared to the other sector, right? So if you see the sectors like the finance and the IT and pharma, that have been quite stable as compared to the other high growth sectors, right? So this is an indication that the money is slightly shifting towards the defensive names, right? The defensive stocks like the IT stock, or the pharma stocks, or the consumer stocks like your FMCG, right? And because if you look at the FMCG index also, it resisted the fall quite well. So if you compare it with the mid cap or the small cap names, right, or the other sectors, you can clearly see that it has been continuously going up from last few days as compared to the other sectors. And pharma fell a bit, but again, it fared well as compared to the other sectors. Energy also fell, and your PSU, especially the PSUs also fell, and your industrials, consumer durables, etc. Your CPSC index also fell a bit, around 3% or so, right? So again, the my take here would be that the sectors that are still standing a bit strong are the banks, the IT large cap, especially the large cap IT, your FMCG and pharma, right? So sectors like metals are not looking really good, and auto is also looking a bit that it could expand on the downside, but we'll have to wait and see, right? So currently the indices are also painting a weak picture right now. So again, my take would be it would be better to stay a bit cautious right now as compared to jumping in, right? Even if you want to take a trade, I'd recommend going in with a lesser position size, going with a tighter stop. Next, we will look at how the sectors have been doing, right? So which sector resisted the fall versus which sectors fell very sharply, right? So for that, I'll just go to that Tijori market monitor, and first of all, we'll see the one-day activity in an descending order, right? So which sector was the strongest and which sector fell after that. So again, one thing is here, polymers, I don't know which companies are in polymers, and they also don't have, so we'll skip this one. So one thing you'll see, telecom and railway, which have been doing well from last few weeks, resisted the fall quite well. So if you go to the railway sector itself, you'll see most of them bounced back from their 10-day moving average and resisted the fall on Friday, right? So if we go and check out the railway sector, so Titagarh wagon again bounced back from around the moving averages. So JWL actually is quite one of the weakest one amongst the railway wagons, right? So again, there are subsectors within a big sector, right? So railway infrastructure, if you see, Railtel was trying to bounce back, but again failed. So if it breaks the 21-day moving average, I'm expecting it to come down to around 450 or so. Then Ircon resisted the fall quite well. It bounced back from around the 21-day moving average. Rights again, it was one of the weakest stock in the sector. When all the railway sector, like entire sector, railway sector moved, it failed to move higher, right? So again, would skip this one. And if you see RVLN, so it's showing amazing strength. If you see again, bounce back from the 10-day moving average, forming a high tide flag kind of formation here. IRFC again bounced back a little from the 10-day moving average, right? So one thing is clear, that the railway quite well resisted the fall. Again, it has been a quite a winner from, especially if you look at the last 3 months return, so 51%. So it has been the top gainer of last 3 months. So I don't have too much expectations from this, right? Going forward, it could take a break, right? There could be a bit of sector rotation happening, right? Because again, if you see, defense was the winner of last month, but if you see from the last 1 2 weeks, defense has been the biggest loser, right? So again, that is one thing that you need to keep in mind, that the sectors, although in strength, but a sector that has been performing continuously, so it might take a break. Like, just look at the defense, look at the fall, right? So till this point, the sector itself was looking really really good, the stocks itself were looking really really good, but look at the fall that happened after that. So I'm not suggesting that it will continue to go down, but there is a very high chance that it may, right? Then we see the private banks also, the large cap IT, especially the TCS and the Infosys, resisted the fall a bit. And if you see the private banks, right, so South India Bank actually closed positive. And if you see other banks like the Kotak Mahindra, again resisted the fall. If you see ICICI Bank and HDFC Bank also, both of them quite well resisted the fall. If we look at the sector itself, so private banks, so Axis Bank fell 1% or so. Again, it did better, and it's continuously surfing above the 21-day moving average. And you look at Bandhan, it's already a laggard, so we'll skip this one. Again, CSB laggard, CUB again a laggard. If you look at the top banks, that is the HDFC Bank. So after the quarterly update, it has been continuously going down, but currently taking support at the 50-day moving average. So ICICI and Axis and SBI, these three have been acting as the leader of the uh, banking sector. So again, you see it resisted the fall quite well, and look how beautiful it is, staying above the 10-day and the 21-day moving average, right? So again, there I don't think there are any opportunities, trading opportunities in the banking sector. So it is more like your investment kind of sector right now. There are no quick moves here, right? So again, refactories, you see another interesting sector that resisted the fall quite well. So if you look at the this stock, Vesuvius India, so again, a very nice formation that is going on here, taking the support at the 50-day moving average, consolidating in a range. So there's nothing that it can break the 50-day moving average as well, but currently the bias is towards the positive side, right? And if you look at the metal pipes, especially if you look at the electro steel casting, Welspun Corp, again, Welspun Corp has been doing good from last 2 3 weeks, right? So these are the sectors where you need to keep your focus. Like Welspun Corp, again, it gave a big base breakout and just consolidating above this range right now. So another stock was electro steel casting, which was actually did really well and is also on the verge of a big base breakout, right? And if you look at other stocks from this, again, Maharashtra Seamless, laggard. Man Industries fell a lot for some reason, right? Electro steel casting and Welspun were the two positive names that I'll pick from this sector. If you look at the plywood sector, so we have names like we have some names here like Rushil Decor, Greenply Industries, Green Panel Industries, right? So again, if you look at the charts of these stocks, Greenply Industries. So again, the setup itself was good here, but again, as the market fell. So one thing that the market is suggesting right now, that like there are very few actually good buying opportunities where the risk is very low, right? So again, my take here again would be that it's better to stay away from the market at least till the budget is you know budget is presented and how the market reacts on the budget, right? So overall, currently, if you can see, all the things are pointing towards the negative direction. And if you see the last 1 week performance as well, so the telecom has been the best performer. If you look at the Indus Towers, Suyog Telematics, stocks like these have been doing really well in the telecom sector, right? So like, wait a second, Indus Towers. So if you look at the Indus Towers, so again it has been doing really well, surfing well above the 10-day moving average, right? Another from this sector, and not very much discussed name, so Telematics again gave a large base breakout, but again due to the pressure on the market on Friday, it fell, right? Another sector, PSU, has been improving. So if you remember my last video on the sector rotation, there the PSU was the most underperforming sector of last 3 weeks, right? So here you can see some PSU banks have been setting up well, especially the Maharashtra Bank is setting up well. SBI has been doing good, right? Again, it fell due to the overall market pressure. And if you look at the SBI, so it has been doing really well as compared to the other banks. Canara is quite stable right now. Again, these are consolidating from past few months, so any buy point would come only above once it crosses their previous high. That was around the 3rd June, right? And a large cap IT, again aviation, if you see, especially Indigo, the setup itself is quite good, but again not immediately buyable, but again it has been surfing well as compared to the overall market, right? So here I come to the last part of my analysis, market review, right? Is the stock selection, right? So I was going through the stocks which resisted, especially. So my first take here was just go through the stocks that still ended up positive on a negative day, right? So that was the first thought that came to my mind. Whenever the market falls, first go to the stocks that resisted that particular fall, right? So again, so first of all I did that and I found these names, right? So again, if you see Orient Electric, again ended up positive and the overall setup is good. You see GlaxoSmithKline Pharma, so again from the defensive sector, that is the pharma sector, it resisted the fall quite well. CMS Infosystem, so again we can count it in the banking sector, right? So again it did well, bounced back from the 21-day moving average. You see Coromandel International, although the sector as a fertilizer as a sector is doing really bad right now, but again overall if you see this stock has been doing better. TTK Prestige, again a very nice consolidation after a big base breakout from here, that too above the 10-day moving average, and resisted the fall quite well. EMS, again the sector, the water related sector, which has been doing quite well from last 2-3 months, again resisted the fall, bounced back, and plus there was the news of order win, I think so, right? So this again from the fertilizer sector, I think so, again resisted the fall well above the 20-day moving average. Vesuvius we already discussed from the refactories. LIC did quite well, right, coming out of a large base and bounced back again, right, again from the banking insurance sector. Star Pharma, again from the pharma sector, if you see. NetWeb from the IT sector. Then we have the Indigo aviation sector. Then we have the Alembic Pharma, again from the pharma sector, coming out of a large base right now. And DV Slabs, again from the pharma sector. So again you'll see the defensive sector like the pharma, FMCG, IT actually resisted the fall quite well. Look at this beautiful setup of Imami again. Like if the overall market environment was a little better, then this would have been my go-to setup. And if you look at the Godrej Consumer, again we have a simple horizontal line kind of a setup here, which is looking really good, right? And if you see, the last one that I have in my list is the Electro Steel Casting, which is from the metal pipe sector, which resisted the fall quite well. And look at the volumes as well. So again, this is a candidate from of a big base breakout. What I would like to see here is that it should consolidate a bit here and then break out. So my overall verdict here would be is that first we'll wait. I would like to wait and see how the market reacts on the budget, right? And I'll stick to the defensive sectors right now, right? And index also showing is that the broader market strength is not there. So my take would be that stay in the cash for now, at least resist the urge to buy new stocks every single day. And even if you find a setup that is really good, that you want to buy it, like you feel like you just want to buy it right now, then I'd say go in with the smaller position size and keep a tighter stop loss. So that is it for today's video. I hope you guys enjoyed it, and anything I have discussed in this video, any stock or so, is not a recommendation, right? So I guess that is it. Goodbye, take care.